Thank you for joining me. I'm Alex, and I want to talk about T-Mobile today. So, obviously, we're talking about T-Mobile US, which is a subsidiary of T-Mobile Germany, which is a subsidiary of Deutsche Telekom, which actually that's where it ends. But anyway, so what they do is a cell phone service in the US, obviously, and they actually wanted to be bought by Sprint a few years ago, and that deal kind of fell through, and now they're buying Sprint, which is kind of ironic. So current price is $96.48, which gives them market cap of $82.6 billion. Dividend is zero, and I don't expect that to change anytime soon. So if you want a dividend stock, AT&T is actually a pretty decent stock, and Verizon as well. AT&T is probably the better dividend player, but either way, you're going to have to do some research into that. Revenue $45 billion, which is up 3%, which is pretty nice. Earnings $3.5 billion, which is up 20%, which is also pretty nice. And I would expect the revenue growth to continue. Obviously, earnings growth of 20% is unsustainable, but PE of 24 is pretty nice. Forward PE of 18 is pretty decent. So obviously, they expect the earnings to grow significantly from here, which is obviously a very good thing. And I actually don't have a problem with that figure. I think it's possible, and if we don't have a huge recession starting very soon, I think that's very attainable for them. Total assets $86 billion, total liabilities $58 billion, which gives them total stockholders of equity of $28.8 billion. Up 15% is pretty nice, even though they increased both assets and liabilities 20%. Obviously, the higher number in assets makes that a worthwhile trade. Plus, you have the earnings of $3.5 billion coming on top of that. So things are definitely going in the right direction. And they have been competing more and more with both AT&T and Verizon and Sprint and many of the other players out there. And there's actually many other brands that use their network. Walmart Mobile is one of them. I think Straight Talk is as well, and Straight Talk is TracFone, and they have like 10 other brands. So their network is pretty decent, and decent enough and cheap enough for many other players to use. And the merger with Sprint will make them reasonably big, a good competitor to AT&T and Verizon. And so that's why I thought it was interesting to look into the stock today, and we'll probably do Sprint later this week. Walmart reports earnings in a couple hours, so I'll probably not be doing Sprint tomorrow. But I think it would be interesting to look at both and see what the benefits and the risks are of merging. Overall, I would say that there aren't really a lot of risk factors here because they've been competing fairly well. They've been building their network. They've been getting more market share. And if anything, they are the risk factor for Verizon and AT&T. So as far as that goes, I don't really see any major risk factors here besides like global uncertainty, recession, all of that. And obviously the balance sheet is pretty nice, so they can actually compensate a recession. They can compensate for much lower earnings than they have now, and they wouldn't really have any problem with that. And obviously in this day and age, no one is going to just go without their cell phone. That does remind me, though, of one risk factor that might be a thing. Starlink. Starlink could conceivably compete. It's just that they won't for the next few years, and they might choose not to after that, because Starlink might just be providing services to T-Mobile instead of competing with T-Mobile. And I think that would be very lucrative for both of them for so many reasons that I'm not going to get into right now. But either way, good revenue growth, good balance sheet, decent forward PE. It's not great, but the growth is definitely respectable. And so for a value investor, I think that this might be a stock worth looking at. Obviously, you can get stocks with better forward PE and with a dividend, and so there might be better opportunities out there, but this is a fairly safe stock. I think that they'll be growing for many years to come, and so I think that it's definitely worth looking into and doing your own research if you're a value investor. If you're counting on them paying a dividend, I would not count on that soon, and I would wait for whatever happens with Sprint and their network and how much it overlaps and how much they still need to build out. If they have a reasonable coverage for all of the US, I think a dividend is likely, but I don't think it's going to happen in the next 5 years. So if that's your horizon, I think as a dividend investor, you're just going to have to find a different stock. And as a growth investor, I also don't think that like double-digit growth is sustainable for the next 5 years or so. I think for the next 2-3 years, maybe. After that, I would assume that it kind of tapers off depending on what they do. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.